In this video, I want to talk to you about the Augusta loophole, an absolutely bombshell strategy for our clients that has helped them save just a ton of money on taxes. The Augusta loophole is a strategy that allows for the renting of a property, a residence, for up to 14 days per year. And as long as you don't exceed that 14th day, you don't dip into 15, then that entire rental income that you earn for renting the property is tax-free. Why does this work? So this relates to the Masters, which is in Augusta, the city. I'm not sure if you're aware, but our tax code is essentially written by the rich and powerful in this country. So the people that own properties in Augusta wanted to be able to rent out their homes just for the event and not again throughout the rest of the year, and not have to pay any tax on that income. And that's actually now IRS code. The beautiful thing is, even though the rich and powerful are the ones that got this code enacted, all of us get to take advantage of it if we're aware of it. And that's the purpose of this video, to bring to your attention the fact that you can do this. How does this actually work? You can rent a residence that you own, again, for up to 14 days. And again, if you don't exceed the 15th day, then all of that rental income is tax-free to you. The way we use this as a strategy for our clients is to have them rent their property to their business for a business purpose. There has to be, for anything that you want to deduct, just so you're aware, there has to be a business purpose to what you're doing. So the purpose in this case is to hold business meetings throughout the year, again, related to the business. It could be just reviewing your P&Ls, your balance sheet, your financials, reviewing the performance of your business. It could be to discuss strategy, kind of where you're going into the future, where you want to take your franchise or your consulting practice. If you do this, there's a couple of amazing things that are going to happen. First, all of that rental income now to you coming from your business is tax-free. Not paying any income tax on that rent. If you rent for a 15th day, all of it is taxed. So it has to be 14 or less. Also, what happens on the business side? That's a rent expense. You're actually creating a deduction on your business, which is going to reduce the taxable income on the business, which means what you're paying is less. Now, regardless of if you're set up as an LLC, LLC S Corp, a corporation like a C Corp, this can work. From an LLC and S Corp standpoint, you're reducing the income that is eventually going to flow through to your personal return, so you're paying less in tax. If you have a corporation, you're creating a deductible expense, and the corporation is going to pay less in tax. And just as an example, let's say the daily rate of rent that you determine. So by the way, you do have to do research to determine what would be a fair, a daily rate for the space you own and for where you are in the country. That daily rate, let's just say for example, for easy math, is $1,000 a day. So if you do this for 14 days, you're creating a $14,000 tax-free cash flow to yourself from your business. And then you're also creating a $14K deduction on your business. Again, for easy math, let's say you have a marginal tax rate. That just means like the tax rate that you're paying on the next dollar that you earn is 20%. So that's going to save you $2,800 in taxes that you otherwise would have paid. Now, there's even another benefit to doing this. If you're taking a salary, so let's say you have an LLC S Corp or a C Corp, or a C Corp as an S Corp. In all of those instances, you're supposed to take a salary if you're the owner operator of your business. So on that income, you're paying employment-related taxes, Medicare and Social Security. Well, now you can use that 14K in our example as a part of your comp and actually reduce what you're taking as a salary by that same amount. And now you're going to be paying less in Social Security and Medicare tax than you would have paid. What you have to do in order to put this into place, there's a few things. One, as I mentioned, you have to actually conduct research to determine what would be a fair rate for your space in your state, county, and city where you are in the country. You also have to create a daily agreement between you and your business. It has to be an actual business transaction. So there has to be an agreement behind it saying, hey, business is going to rent property from individual for purpose, whatever you determine that is, for that specific day, for that specific amount, and signed by each party. Now, even if you are the sole owner and sole operator of your business, you can still do this. That's what makes this such a powerful strategy and different from a lot of the strategies. There are hundreds that we suggest to our clients. This one in particular is attractive because pretty much anyone can do this. So if you're not currently doing this, if your CPA or tax advisor or financial planner have never suggested this to you, well, I'm bringing this to your awareness. This is something that you can do, and you can save a lot of money. Now, for each meeting, you should also document what was discussed. So you should have an actual recorded, like a minutes explaining, hey, we met on this day, or I held a meeting. It could just be yourself. I held a meeting on this day to review my financials or to strategically plan for my business. And this was the results of what I came up with during the meeting. And when is going to be the date of the next meeting. So pretty simple, like 1-page minutes. And then the last step is to actually transfer the money by ACH or check from your business account to your personal account, and you're done. You've now taken advantage of the strategy. You also want to make sure when you're working on your taxes at the end of the year, you really want to work with a preparer that is familiar with how this works, because you are supposed to report this a very specific way on your tax return. So if you're going to do this, let your accountant or tax advisor know so they know how to prepare your return. If they're not aware of the strategy or how to report this, probably should find someone that does. That's it for this video. I hope it was helpful. A lot more to come. This is really the beginning of a series that I'm going to be doing on strategies that work to reduce your taxes. Again, for franchisees, franchisors, and franchise consultants. Thank you very much.